the quarter at least has been largely in line with consensus expectations. Guidance too, at least as far as revenues go, that was in line with expectations, but in constant currency terms between 6 to 8%. Margins perhaps may disappoint the street with the kind of numbers the BQ poll was throwing up. And of course you also have Panaya and Skava put on scale for now. So we have Shailendra Kumar, the director and CIO of Narnolia Security, is also joining us to take us through the numbers and what his take is as far as the earnings and more developments are concerned. Shailendra, hi, thanks for joining us. Firstly, let me just start off with what you make of the earnings for Infosys in the fourth quarter.
Yeah. So for Infosys, the gradual marginal growth continues this quarter as well. And some of the key positive that we saw in the result and the commentary of the management. So the deal win this quarter, the Q4 of FY18, they have won a deal of about $905 million, which is the highest in the last, I think, 4 to 5 previous quarters. You remember Q3, the deal win value was about $739 million. So at the time when the management was in the transition, at that particular point in time, the order win being better than in the past, tells you that the client side of the business is pretty nice. And Mr. Salil Parekh also said in the interview, so that's very positive. The other positive, if you look at, the digital has got now a good amount of traction, so almost 28% of the revenue. So, one part where the market will be a little bit disappointed will be the margin guidance. So they have reduced the guidance from 23-25 to 22-24%. But I think that was considered because already for the last 3 quarters when the margins were going up, it was primarily because of, they were raising the utilization level. And the last quarter, the utilization was already 85%. And from those high utilization level, you can't think of further room in terms of improving the utilization.
Yeah,
Right,
Shailendra, the issue with margins, again, that was my very next question, is the guidance. So far you said yourself that they have been able to manage their margins about 24%. Now 24% is their highest in terms of the range, which means that you expect the margins to come off to a certain extent. Even if you leave the utilization levels aside, you can't possibly expect the utilization levels to go down so much that, it could actually come down to somewhere around 23%. Are you expecting that? If that is so, then what are the other factors that could also put pressure on the margins?
Yeah. So if you look at the management commentary, like Mr. Praveen said very clearly, what is happening is the business is tilted towards the on-site. And the on-site, of course, you will have a little bit of a pressure on a margin. Of course, they are trying to, hire a lot of, they said localization of talent, right? So they are having good amount of person as a fresher in US. So they are trying to, control the role ratio at the on-site. So they are trying to have more freshers vis-a-vis the senior management as an on-site to maintain the cost. But still, this ratio of on-site, off-site, now getting a little disfavorable. So this kind of a pressure on the margin is understandable. And as he said, because of the change in dynamics of the business, they have to do it. So there will be some impact, some negative impact on the PAT assumption for FY19, but that's not be very marginal because see, even for us, we were taking 24.1 as a FY19 margin. So it will be some kind of a minor tweaking here and there. But largely, if you look at the kind of environment in which Infosys had been in the last 1 year for all kind of wrong news, it looks now very stable set of management strategy. So that's very positive for the company.
Okay, Shailendra, we leave it at that. Thanks for joining us.